welcome to a new video. Today we're gonna talk about your edge and how it apparently, quote unquote, apparently it stopped working. As you may know, a lot of the work towards profitability is focused towards working on developing an edge. You first start by learning the concepts you want to build your edge around, then you sort of put those concepts together, and as you do your case study, you look at the charts, you see what works, what are the best looking setups within what you learn, and as you fill your case study, you get maybe a couple, I don't know, 300, 400, 1,000 of these examples, and then you start backtesting. You refine the strategy, you see what works best, what are your best tricks, your worst, you find out your win rate, what's your desired risk to reward ratio, and all these fun things. You get around 1,000, maybe 2,000 of this. Then you may go to a live demo account for a couple of months. And once you prove yourself that you're profitable, you hop on a live account. This is in short and diluted how you develop an edge. A lot of people don't do this or get a very small sample size of testing before realizing that maybe for the most part your strategy is not bad but lacks something and you don't know what. They think that the edge has stopped working and that the markets have changed. And the truth is that yes, the market have changed, but not in the way that you think. Now you have to understand that as a trader, it's all about probabilities. This means that as a trader, you have to put yourself in the best possible situations and in the best market conditions in order to maximize your chances of winning and by default, having some kind of success. That being said, most of you don't do this and you trade your entry criteria hoping for the best, and this is how you become a victim of market conditions. These are the same people that say, I'm gonna be a gold trader because it always moves like this, or I'm gonna only trade Euro USD because it always moves like this. But this is wrong because it's not about the asset, it's about what you're trading. What are the market conditions of what you're trading? Another thing people say is your edge stopped working or your strategy stopped working because you didn't test it through multiple market conditions. This is also a lie because the truth is yes, you have to test your strategy for long enough to know it works, but you shouldn't trade your strategy through all market conditions. For example, a sideways or choppy market like this, instead, you should learn to sideline yourself and wait for the best market conditions to show up again, and this way you will have a more consistent and sustainable strategy. Also, your strategy should look very similar from trade to trade. If you're trading through multiple market conditions, this is not gonna be the case because sometimes I'm gonna trade through optimal market conditions like this, and then I'm gonna trade through these market conditions. And this doesn't look like each other at all. So we want our strategy to be repetitive and to look similar between each entry. Where I'm basically trying to go here is that your edge didn't stop working and it's not about the asset, it's about the market conditions. What you're doing is that you're not using what makes your edge sustainable. Remember that as a trader, the only thing that you're doing is probabilities. You're letting probabilities and statistics happen. So instead of entering on every single market conditions, why wouldn't you put yourself always in the best market conditions so you have the best probabilities for your trades to play out in the long run? For this, I'm gonna give you a little exercise. I want you to go to any chart and instead of trading whatever price action, look for the obvious. I want you to look for clarity. Take your trading glasses off and put your common sense glasses on. Almost like a kid would. Go on a chart and tell me where the market is clearly strong, clearly going in one direction, and that is going to give you real clarity as well as putting yourself in the best situations to perform your strategy and make your edge work. Being on the right side of the market is not enough. Being bullish is not enough. You need to look for optimal market conditions and momentum so you're going along with the market and you know that money is coming in. Always put yourself in the best market conditions. And if your entries don't look similar, Look at my entries. These are all entries that I took. This means that you're likely not following your edge and you're trading in random market conditions, basically. So, for one, instead of settling for sorry ass market conditions, which we often do due to lack of opportunities, for example, if you're in a highly correlated market, you might find yourself having lack of opportunities. Because, for example, in Forex, we have about 24 major pairs, but in reality, you're trading 4 different moves because they're all highly correlated. This is why it's important to diversify yourself and trade multiple markets, for example, crypto, commodities, you may do some Forex, or personally, I like to do stocks. And no, you don't have to worry about markets moving differently because they don't. The only difference is that some markets may trend more than others. For example, stocks are more of a one directional market and they don't go as sideways as, for example, Forex. So you don't have to worry about this and about learning different concepts depending on what market you're trading because all markets move in the same way. I got a bit out of topic here, but like I said, instead of settling for bad market conditions, you either wait for proper context or you diversify yourself and look for opportunities elsewhere. Now, we all have a different outlook on what good context is. And for me, good context is basically a market that shows me there's money behind it. And not only that, but also that it shows me that the direction is agreeing with me through multiple timeframes. What do I mean by this? I mean that, for instance, if I'm using the daily for my higher time frame, let's erase this real quick. If my higher time frame is the daily, I want clarity through multiple time frames. Like, for example, I'm using the daily, so my middle time frame is gonna be, I don't know, the 2 hours. And my entry time frame is gonna be maybe the 10 minutes, the 15 minutes, the 20 minutes. So I want agreement through all these time frames while it's showing me a clear direction. You can use a couple of tools like the 200 EMA. I use this to determine direction. You can look into the momentum of the asset that you're looking at. For example, this came off with lots of strength, with a beautiful stage 1. The stage 1 is just basically the sideways or the retracement move. I want the EMA 10 surfing price, as you can see right here. And just overall, look how clean this price action is. It went into a stage 2, which is the markup or the upside move, telling me that there's lots of money coming into this market. Then I went into the 2 hours and looked for something similar. Something that's telling me that the market is agreeing in that particular time frame with this higher time frame. So I went into a 3 hour. I think it was more like a 2 hour. Yeah, 2 hour. And I saw how price was agreeing with the higher time frame. It came off with a lot of strength, while price was surfing the EMA 10, came off with a lot of strength, and same thing repeating itself. Once this was created and price went sideways, I went into a lower time frame because through these time frames, price has been telling me that there's lots of money coming in, that price is trending, that's coming with lots of momentum, and now I just want to go into my entry time frame, which is my smaller time frame. I went into the 15 minutes. I saw some sideways action here, and as we can see, price is going through stage 1s and stage 2s. Now here I'm waiting for the stage 2 to play out. So for me, this break right here, this break of highs right here, show me that price wants to potentially go into stage 2. So once this high was created, a retracement happened, and I buy stopped the break of this. For me, this is what great context looks like. Something that's with strength, something that's agreeing with me through multiple time frames, telling me that money is coming into this market. And on my lower time frame, it's telling me that it potentially wants to keep going. Now notice how all of my trades look pretty similar. These are all trades that I took last week. I entered on this one. I also entered on this one on a lower time frame, right here. And I also entered on this one. Let's use the backtesting tool to make it clearer. And I also enter on this one. Notice how they all look very similar. Let's put them side by side so you can have a better look. Okay, these are all the 3 timeframes that I use on each one of these. Of course, I use different timeframes on each one of these because I basically trade on all timeframes as long as it's above the 5 minutes. So each trade was in different timeframes, but that doesn't change the fact that through all the 3 timeframes that I'm using on each particular trade, they all look similar. Let's take a look at it. For example, these are my higher timeframes, and as you can see, they all look pretty similar. Just take a look at this. See them side by side. These all look similar. Stage 1 into stage 2 into stage 1, and as stage 2 is delivering, I went to lower timeframes and repeated the process. Same thing here, stage 1 into stage 2 into stage 1, and when stage 2 was happening over here, I went into a lower timeframe. Stage 1 into stage 2 into stage 1, and as stage 2 was happening, went into a lower timeframe. And also you can tell how much strength and with how much money price is coming into this market. Just look at this. Look at how clean this looks. This is the type of price action that you want to look for, and these are the market conditions that you want to perform in. Let's go into a middle time frame or middle time frames and take a look at these trades. Stage 1 into stage 2 into stage 1, price coming with lots of strength, and once price starts setting up, I went into a lower time frame. Price is surfing the EMA 10 and EMA 20 potentially, and let's take a look at the next one. We can see the same thing over here. Price coming with lots of strength, stage 1, stage 2, into stage 1, into stage 2, stage 1, and then it went into a lower time frame, expecting the next stage 2. Let's look at the next one, and we can see the exact same thing. You can tell how much similar this look. Of course, there's a bit of variations, but overall they all look pretty similar. Take a bit of a closer look. You can pause it, you can put them sideways, but you can tell how much similar these things look. Now let's go into our lower time frame or execution time frame. As I said before, I'm entering on a stage 1 when I see that it potentially wants to create a stage 2. For that, I usually look for some break of highs and I buy stop the break of it. For example, you can tell here, price dips, move sideways, stage 1, and when I see that price start creating new highs, it potentially looks like it wants to go, I buy stop the break of it. As you can see here, also you can see it here, it looks pretty similar, and at the end both ended up delivering, and yeah, this is pretty much how it works. Let's see the last one. This looks a bit more different than the others, but nonetheless, it looks pretty similar. Price dips, stage 1, it kinda wants to live into stage 2, but it goes sideways again, and then I enter right here. Put them all sideways, and you see how similar they look. Just take a look at this. Beautiful price action. Take a look at this. You can also look at it yourself on your TradingView charts. You can see the initials right here, and you can see where it happened. Just look at this, look at this. They all look very, very similar. And this is what you want for your system. You want something repetitive and clear, so it's easier for you to repeat it time and time again, because this is how you really find consistency in the market. Now, thank you for watching this video. If you like this video, please subscribe, comment what you want me to talk about. If you want to join my mentorship, link is in the description, even though you don't need this to become profitable, but if you want, you can join. Thank you once again, and I'll see you guys on the next one. Peace out.